Hello again. The UK GDP numbers came in worse than expected, with a 0.3% contraction, raising the possibility of the first triple-dip recession in living memory. Well, I've been speaking to Ishaq Siddiqi from ETX Capital. Well, the fact that the UK economy shrunk in Q4 was no surprise, but the size of the contraction was maybe more surprising.
Yeah, it was much weaker than expected. The market was looking for about 0.1%, came in at 0.3%. Breaking down the figures, industrial production fell 1.8%. That also accounts for oil output, which fell. Construction was rebounded slightly, where services came in pretty much flat. So no real growth in all three facets of the UK economy. At the same time, we have to note the unwinding of the Olympic effects, so we're paying back for some of that. And there was also a major repair works in the North oil field in the North Sea, and that caused mining disruption and also quarrying disruption. So on the whole, it's not a very pretty picture for fourth quarter, and then when we look at it on a year-to-year perspective, the UK economy pretty much flatlined, so no growth at all.
The very strange thing is that the unemployment data again came out quite good this week, but that can't continue, can it?
I think at this point right now, that divergence between the fact that most aspects of the UK economy is declining, whereas in jobs growth is continuing to improve, and we're seeing more companies hire. It obviously suggests that although the UK is in a dire situation, companies are still relatively cash rich. They've done well to recapitalise themselves. They've revamped their businesses in a way where they can start hiring, and they can continue hiring during the course of 2013. I think the big question is how the current coalition government and the Bank of England can start supporting the UK economy and do a bit more and take bolder actions in order to keep that jobs growth going. At this point right now, I think companies are strong enough to do this for 2013, but beyond that, it's questionable, and we're going to need more support from authorities above.
Yeah, the most interesting fact I've read of the day from Bloomberg, it said that of the G7 nations, only Italy is further from its 2008 level in terms of GDP size. So why is the UK struggling so much compared to its competitors?
Yeah, no, and again, interestingly, this is like 3 years since the UK first registered its recession. We still haven't technically entered a period of sustainable growth. I think the UK is going to struggle with finding a sustainable footing to growth. With a country like Italy, having going through such a dire situation where the finances need to be repaired so radically with the UK, that was the case, but also not the same case as Italy, and you can't put them in the same box there. With the UK, at this point right now, there's a lot of stagnation. We're going to be dipping in and out of contraction for 2013, and it's going to be very hard to find a sustainable footing for growth in the years ahead, especially now after Prime Minister Cameron has put out a pledge for a referendum on the UK's membership in the EU. That means a period of low growth if indeed we do exit the EU, and lower investment and reduce competitiveness. So on the whole, on a 5-year outlook, it doesn't really look too bleak. It looks pretty bleak for the UK economy.
Well, we're not quite finished there. It's time to get an FX view with Lucas. So we should be clear when we're talking about the sterling that any thoughts of the pound being a semi-haven have gone now, haven't they?
Yeah, it has gone, definitely. We saw in the last interviews we did over the last few months, it was really unclear where we stand about the British economy. I think this GDP figure talks by itself. It's worse than expected, and it's actually flat on the year, which is kind of, George Osborne said he was expecting a negative figure and he would stick to his plan. But on the year, it's actually flat, so now it's kind of a worry. Is it going to pick up on a year? On a quarter, we're not surprised it's down. We're a bit surprised it wasn't expected. Now, on the year, it's flat. It's a bit annoying now.
Sure. Let's talk some levels, starting with the cable, because that's dropped a long way below 160 now.
Absolutely. So we had, over the last 6 months, we had a range 150.70 to 163. If you take the average of this range, we are worth 57.50. This is exactly where we are now, 157.70. So from now, obviously, these numbers, GDP, didn't push the pound up, so it went down straight away. It picked up slightly after this because there's a kind of a correction, and I think the figure was expected, obviously. So from now, we more bearish than bullish, and especially because we're going to have some numbers coming to US. New home sales today, not that important, but next week we have the US GDP. If it was to be good, or at least confirm it's not that bad, then obviously dollar would push. So on the pound, we have next support is 55.25, and then we could go even further and 153. We have to know the 153 is a multi-year support from 2010. So every time it touches 53, it has been rebounding. So we can assume it could go as low potentially until 53.
Okay, and what about the euro pound? That's quite interesting because sentiment in the euro seems to be pretty firm at the moment.
Yeah, exactly. So we had an interview, I don't know if you remember, but we said it's kind of confusing. We don't know where to stand. Both are not really strong at the moment. Well, it seems Europe is kind of recovering. We don't have a strong recovery, but it's stabilized, so it looks better. We had ZEW business confidence in Germany, pretty good. IFO index, pretty good as well. So all these numbers push the euro, and the pound at the same time we had the figure is going down. So euro, we are on the range of 85.20 is where we stand now. We're more bullish, obviously, on this one. We think 86.90 would be a good point, simply because it has been a key point in terms of reversal. So 86.90, then we could go 88, but that's really far. As we said, we need to see now from maybe every 2 weeks, we need to redo our analysis, but that's where we stand on euro pound, yeah.
Well, Lucas and Ishaq from ETX Capital speaking to me there. So from a very chilly London, goodbye.